Welcome back to Business Week here on Arise News. I'm joined now by Efosa Aluyi, the head of investments and Kore Global Investment, to review some of our top stories in more detail. Welcome to the show. Great to see you this new year.
Thanks for having me.
How are you feeling about
Very well.
the new year?
I mean, very optimistic.
Okay.
Yeah.
Optimistic about Nigeria, optimistic about the world, economic-wise.
Generally optimistic about everything. I mean, there are issues to be concerned about,
Yeah.
but I choose to be on that path of optimism, really.
Yeah, so let's see. I'm not sure Chinese traders are feeling the same way, because the first story we're talking about here is the trade data.
Yeah.
It exceeded expectations in China, but it seems to be that they're trying to beat the rush to Trump introducing tariffs. So tell us about the dynamics here.
I mean, you just rightly situated it right. I mean, we saw a significant increase in December, much higher than what we'd had in November for imports, for exports. And, the idea really is to try and sort of front load and beat the whole Trump tariff situation. I mean, there's a lot of uncertainty around what could happen with those tariffs. So you have a lot of exporters certainly trying to also front load that. But beyond that, you're also seeing, for instance, you saw steel exports rise very significantly. As a matter of fact, it's highest in about 10 years, thereabout. 110 million tons.
Okay.
Again, there's significant weakening of demand, local demand in the Chinese economy. So China is essentially looking outside to try and take care of all of those issues. So, because if you look at, the inflation situation in China, we're still battling with this whole deflationary pressure, so to speak.
Yeah.
The last inflation figure was 0.1%.
Okay.
That's significantly below the long-term average of about 1.6%. So the concerns around, domestic demand weakening, obviously on the back of the whole prolonged property situation in China that has continued to really challenge the economy, has been a really, really significant problem. So if you look at it from that angle, you're also seeing, the demand, in the local economy is weak. So obviously a lot of stuff has to go out. But again, you're also seeing exporters trying to front load to try and beat that whole Trump tariff situation that seems to be looming.
Yeah, and interestingly, especially with the steel exports, do we have any kind of new readings on the patterns of exports in terms of destination for China? So steel would imply that perhaps there's construction demand in certain economies that typically import from China. What are your readings around its export market?
So, I mean, we also saw a significant increase in exports to its major markets, right? You have the Association of Southeast Asian Nations and the United States. Those are like two top export destinations. And you saw December exports to the Association of Southeast Asian Nations grew about 18.9% year on year, while exports to the US grew about 15.6% year on year. So you're seeing very strong growth in terms of exports generally, particularly to its top export destinations. So again, it plays into this whole idea that they're really trying to push out as much as they can. Recall that the Association of Southeast Asian Nations remains a really strong trading partner for China. There are no tariff threats necessarily there, but the US you really cannot ignore. And a lot of things that China has been doing lately is to try and ensure that the economy is sort of reflated, right? We saw quite a slew of stimulus measures in September. I think we're beginning to see the impact of that sort of kick in. We saw GDP figures come in just last week, actually. Q4 2024 GDP came in at 5.4%, significantly better than what the market had expected, better than the 4.7 we saw in Q3, the 4.6 we saw in Q2, and the 5.3 that we saw in Q1. And this brought total GDP growth for the year to 5%, which was essentially in line with, target for the
and
economy.
I think you make a good point, because whilst we've been talking a lot about tariffs and what is happening with the US and China, the government and the Communist Party there have been really trying to boost growth, try and kickstart consumer spending. I mean, we saw all the measures trying to pump liquidity through the banking sector. But let's talk about what is happening on the other side of the pond, right? There's a story that perhaps some more pragmatic heads within the Trump administration are saying, instead of the sweeping measure coming in like a tsunami to impose tariffs, universal tariffs, why not we take a phased approach? Because look, we're also concerned about inflation. Do you think that kind of policy balance will come into the fray here? What do you think the Trump administration is really planning to do around this tariff issue?
And that's a tough one to answer in terms of what the Trump administration is truly planning to do in terms of tariff. I mean, this has created quite some uncertainty in the international market, right? But I think what what part of the economic team of the incoming administration is trying to do is to understand that this could potentially create significant issues. So they're looking at ways to probably assuage the impact, ensure that this whole tariff thing remains a negotiating tool whilst it doesn't necessarily stoke inflation. Remember that we're just coming off the high heel of inflation, really. You don't want to create a policy environment that then sort of creates that inflation situation again and becomes a significant problem, you know. So, but I think that this has not been formalized, but these are considerations of just sort of staggering the tariffs, maybe month by month, see how that goes. And they're looking to leverage on, you know, certain acts that would allow them to do that. But it remains to be seen how things will pan out on that front. But significantly, you know, this is creating significant, you know, challenges, you know, and uncertainties around the global economy. We're seeing long-term interest rates really rise just on the back of the uncertainty around, you know, Trump tariffs. We're seeing the 10-year U.S. Treasury, the 10-year German bond, they're at their highest levels in about 10 months. The 10-year U.S. UK gilts, although, yeah, there are idiosyncratic issues in the UK, is at its highest point since 2008. So these Trump tariff issues have been front and center. The whole tariff situation has been a major policy thrust for the Trump administration. So it really remains to be seen how things pan out, but everybody's just really trying to prepare the best they can.
And of course, the worry is that policymakers anticipating potential tariff hikes by the US may then kind of potentially prematurely look to try and control inflation. So, you know, I was hoping we would enter this easing cycle, but it seems like the markets are really uncertain. But interestingly, China's economic domestic issues, do you think they're having an impact on its ability to fund and expand its presence in other parts of the world? Because, for instance, this Kenyan story, where the Kenyan government, which has typically relied on China for long-term infrastructure financing, is now diversifying its partnerships to the UAE. The story about the Kenyan railway project, is this mostly a function of China's view of Africa? Is this a specific Kenya issue? How do you read that particular?
I think this is an issue that essentially has to do with the economic situation in China as regards its Belt and Road Initiative. If you look at that Belt and Road Initiative, it's been, you know, really dogged with a lot of opaqueness in terms of how it's worked, but significantly, you know, funding has, you know, really dropped, you know, quite markedly. 10 years ago, that Belt and Road Initiative into the African continent, you were seeing around 10 to 15 billion. Over the last couple of years, it's barely done 2 billion on the African continent. So funding has significantly been scaled back. Again, like you rightly pointed out, China has its own domestic issues that it's certainly dealing with. So this is not necessarily a strong priority for it. So, and obviously, Kenya has to look for alternative funding. This 468-kilometer, you know, railway, which is essentially the second phase, you know, it's of very strategic importance to the Kenyan economy and to East Africa as a whole. So it's basically going from the port city of Mombasa into landlocked regions around that, you know, East African economy. So, of course, also, if you look at the ties between Kenya and the UAE, they seem to have improved quite significantly over the last couple of years. Over the last 10 years, trade has doubled. It's basically, Kenya is looking to finalize a $1.5 billion, you know, financing or loan from the UAE for fiscal support, particularly in the aftermath of the failure of its, you know, tax reforms, right? You know, so you're seeing significant improvement in the relationship between Kenya and the UAE, and you're also seeing the UAE significantly supporting some African countries. We've seen it do that for Egypt as well. So
and even in the area of technology, there have been some technology partnerships in Africa from the UAE.
Absolutely. And the UAE seems to be a beautiful bride right now. I mean, we saw, you know, the president of our own country in the UAE over the last couple of days. You know, the funding is there, so people are really scrambling to see what they can get. So
indeed, and you know, speaking of the beautiful bride, it's not just at the sovereign level. You see a lot of people who are trying to fundraise, you know, whether for big business or big infrastructure projects, increasingly courting UAE and Gulf investors as an alternative source of financing. But on this China infrastructure issue, last week, one of the things I reported on the show was that China's commitment to fund the Kaduna-Kano railway project. And, you know, one of the things that I said, you know, looking at contrasting this with the Kenya situation where it's pulled back from funding is that Nigeria is a resource-rich country. In some ways, China has not stopped its pursuit of supporting projects in resource-rich countries. So I thought that was just an interesting contrast and something to point out. But let's move on to the global smartphone market. Interesting dynamics there. We saw a lull in the last few years. Now we're seeing a pickup again based on the figures that are coming out. And I think it says after 2 years of straight decline, it finally recovered in 2024. Growing by 4%. What do you think accounted for that recovery in smartphones?
Yeah, I think just general macro improvements. I mean, smartphones have become an essential part of people's lives, really, right? Almost something that people really are unable to do without on a daily basis. So as the macro situation sort of improved, you'd expect that, demand would sort of improve. Like you pointed out, we've kind of had a lull over the last couple of years, really. So the pickup that we've had now has been for 5 consecutive quarters. As a matter of fact, this pickup or recovery has been some sort of resurgence and normalization, if you will, within the global smartphone market that started in the 4th quarter of 2023. So we've essentially had 5 quarters of consecutive growth in that smartphone market. I mean, total shipment for last year was about 1.22 billion units. So that market really is expected to grow.
Where were most of those shipments going to?
So a lot of that demand is really being led by China, Europe, and Latin America, right? And you've seen very significant growth, for brands like Xiaomi and co. Samsung still remains, the leader in that market, followed by Apple. But a lot of the other brands have grown very significantly, particularly within that top 5 bracket. But I think that, the improvements we're seeing, in the global macro situation has certainly helped to thaw that, global smartphone demand.
Yeah, and finally, Nigeria inflation. I was trying to wrap my head around what the monetary policy trajectory might be this year. But the December figures, I'm thinking, is it a fluke? It was December, high demand, prices were high. Are we going to see some normalization in January? What does that December reading really tell us about monetary policy? Should it really be a signal for what is likely to happen in January? What do you think?
Well, I mean, if you look at what the Monetary Policy Committee of the Central Bank has done over the last couple of months, then certainly you'll be paying attention to that inflation number. Like you said, I think, it really was not surprising, right? If you look at what happens in December in Nigeria, a lot of spending goes on and stuff like that. So clearly that sort of increase is really not unexpected. But then again, you have to look at the fact that towards the middle of last year, we saw some sort of, reduction in inflation really. But then again, closer to the 3rd quarter, we saw, adjustments to petroleum prices, and that actually had an impact on inflation. So we'll have to keep an eye on the global prices for crude oil. If that, we've seen, some sort of resurgence over the last couple of days. If that continues, then it certainly will have an impact on our own pump prices and by extension, our inflation. And obviously, it would have a bearing on what monetary policy does going forward.
Indeed. Interestingly, of course, Russia has faced new sanctions from the US. Oil prices have been up in the last couple of weeks. But the other interesting thing about the inflation stats, which we saw on the screen just now, is month on month, we've actually seen a small decline. And I'm wondering just how much of that will be a bigger factor for the monetary authorities when they're looking at the overall strategy compared to the annual inflation rate. What do you reckon in terms of the nuance around that?
Yeah, I mean, so that movement around the monthly number has been really not consistent, right? So that year-on-year headline number really remains the key thing that they will be looking at. Over the last couple of months, there have been those feelers that you really are unable to properly address this inflation issue with monetary policy, right? Nevertheless, the committee really has gone ahead to really tighten the noose and continues to do so. So again, the expectation is that they will keep a really close eye on that headline inflation number, year-on-year number, and it will continue to drive and determine what they do, at least in the near term.
Yeah, indeed, in the near term. I'm going to be looking at very closely for the structural factors in 2025, because we've now been on a trail of monetary policy for over a year, and we need to see even more movement in getting those figures down. Thank you so much, Efosa Aluyi, Head of Investments at Sanctuary.
Thanks for having me.
Thank you so much.